Nice segue.
The Baker Hughes.
The rig
Bring
count.
Peter in.
Yeah, Pete McGuire is joining the programme. He is live for you now. Pete, warm welcome along from XM.com. Let's talk energy. And again, the US dollar. It's kind of been bobbing this way and that. And of course, very susceptible to what Janet had to say over the weekend at Jackson Hole. What are we making of the last 12 hours or so of USD trade and the swing it's had on the commodity story?
Well, good afternoon, Carson and Mark and John. A couple of quick things on that, Carson. I mean, you know, the US dollar, we saw it uptick and then all of a sudden it's flattened out a little bit and lost a little bit of those gains. Where the crude market sat, we've got a very interesting couple of weeks ahead of us, leading into, of course, Algeria and what goes on as far as OPEC. But back to Janet, I think the jury's out, Carson. No one can really say whether it's definitive it's going to happen this year. If they are going to move, you would expect them to do it sooner than later. But now many are talking that it could be a first quarter next year sort of move. And that leads into, a new president walking into the White House as well.
Tell me about the Fisher connection. Everyone's now kind of grabbing hold of Stanley and saying, you're the real rock. Yeah, and he was walking around and almost, it was, dare I say it, this is a very crude analogy, we don't have the pictures, I'm sure we don't have the pictures, unfortunately, to show people, but it looked as if Janet was being shepherded around Jackson Hole by Stanley, as if he was almost she was in a straitjacket and he was just weaving her in and out of people and running the thing solo. And he had a red jacket on. Was that, to your mind, signalling anything? was that subtle auto-suggestion that we won't be raising this side of Christmas?
Well, I didn't think the red jacket was that subtle. I think it was probably the more, to get the balls running and seeing if we can get a little bit more traction for that US dollar. That's the way I read it. Okay. But where we are at the moment, I mean, he seems to be certainly gone out on a limb and been the global spokesman to try and, rally the cause and get the Fed to act. There are the other side, of course, that aren't as hawkish. And I think that what's going to happen, unless he gets something, as far as some traction in the days and days ahead, I think it could sit on its hands for another, 6 to 8 weeks. And that's the trouble that I think he realises, considering that this delicate time and passage leading into November.
The thing to think about with Stanley Fisher, and it's important, is that he is the academic that was their academic.
Oh,
so he was Larry Summers, he was Ben Bernanke. He did Ben Bernanke's thesis. I don't know that he was the educator for Yellen, but it's Mario Draghi. He literally, they've all come... Renzi,
or you're right, Draghi and Renzi.
So for him to be the talking point, becomes much more interesting because of who he's talking to, which I think he's talking to not just CNBC and saying there's 2 hikes, but he's actually talking to some of the academics saying, basically give me the support. This is the view that we've got. We can see it, we can do it, and then looking for the feedback. And I'll get you some feedback in a minute. Because Larry Summers has come out on Twitter saying,
Okay, good.
It's wrong.
Find that, and whilst you do it, the kids that are in the other room, a.k.a. the directors, have found the footage. There you have it. See the red jacket and Janet in the middle there, just effective. I mean, I might be reading too much into this, but it looked to me as if Stanley was far more relaxed. She was at pains to show she was in charge, but Stanley, look at that, the swagger, the new Labour cup, the new Labour mug as well.
I'm in favour of Yellen. Yellen's a strong personality. She is not going to make
then she agreed, look, we're going that way, because then she did her up finger, and she did do the right-hand turn. Yeah. Only because Stanley said, turn right now, go right. Look out to the countryside.
Yeah. He knew the view.
Okay. There's fly fishing over there, Mills. There is some very good fly fishing.
And think about what the Jackson Hole symposium was about. How to create a resilient monetary policy, essentially. And it's about the resilience, about what is where we are now.
It's not an oxymoron.
Well, that's their point. The threat that it's becoming an oxymoron is of worry to them. So how do we make this resilient when we're so close to zero and you across the ditch are below zero? So what do they do?
Hi, Peter. It's John Milroy here.
Yeah, hello, John.
Still with us?
Sorry, John.
Just how do you think that plays itself out in your markets, particularly energy? I would have thought is going to be very crucial here in terms of if they go next week or next month. What change do you think it brings to your markets?
Well, I think, John, most importantly, what happens to the US dollar, and that's the great unknown. Yeah. If we do see a rate rise, naturally that's going to ratchet up the US dollar, and I think that the further heat will come out of that energy market. Yeah. But you've got to also look at what happens. We've stripped 3 million barrels barrels out of the market per day in the sense of where Venezuela is, Nigeria, and a couple of those other smaller players. We've had increased capacity and increased production coming out of the Saudis and, of course, Iraq. So that really plays into where the OPEC meeting is later in Algeria, I think the 25th, 26th of September, and a freeze on production, John. So whilst we take on board the Yellen and Stanley and all of that team as far as Jackson Hole, the unknown is what happens with OPEC, and that's the crucial matter at the point. If there is a production freeze, John, then I think that you could see a ratchet up as far as energy prices.
Thanks.
Bullion as well. We're waiting key data, of course, on jobs. So, I mean, where is your real catalyst for buying at the moment? We get a good jobs report, we get US dollar strength, we get what? Less appetite for bullion, yes or no?
Well, probably right, Carson. And who would have imagined that this time last month you would have hit a number of 255? It's consensus, and most of the analysts were saying, 130 to 160. Be interesting to see what this week's number is. Considering that we could hit a 2 number in front, so I wouldn't be surprised at 205, 210. I know that possibly a little bit bullish, but there seems to be a continued drive there as far as that US dollar and, of course, the unemployment. So, in turn, I think where the precious metal market is, and as far as gold's concerned, it seems to be languishing around that 13.15 to 13.30 mark.
Just to come back on the Fed a little bit, do you think then the jobs number becomes the catalyst for all of it around September, or do you think that it's really not the market list and price of September is a realistic option for going higher? Do you think it is a realistic option that they might go higher in September and they need the jobs number, or do you think it just wait till December, they'll go at the nth, the last minute again?
Well, they can't be worried too much about inflation. It's running at about 0.1% a month, so that's not a concern. The other side of it is they just want to see what this job number is, and if it hits the ball out of the park, that could be the cause and there could be the need to say, yes, we'll ratchet it up. So I think as each week rolls on, we'll have a better understanding by mid-month as far as September's concerned, and then that plays, of course, into, what goes on as far as OPEC and so on.
Okay. All right, a brief final thought on the softs as well. You've been looking at live cattle, you've been looking at ag. Again, it looks as if the storehouses are full to bursting. Does that mean further disinflationary pressures sweeping the economy? We started this discussion talking about the Fed. Perversely, when we get bumper harvests, it ought to mean cheaper prices.
Cheaper prices.
At the shelf. On the shelf, yes or no, Pete?
Yes, exactly right, Carson. Wheat prices are now at a 10-year low in the States. Corn, they're dragging those lower to a 7-year low. We've got a bumper harvest across the whole soy, corn and wheat of this year. And that's really just affecting, the yields are wonderful, but more importantly, prices are crashing. So I think that it's going to be cheaper, and that rolls into what we just mentioned as far as inflation. Core inflation of 0.1% a month. So it's going to make it cheaper for consumers, and that in turn is a good sign.
Great to talk, as always.
Thank you.
Have a good rest of your week. Pete McGuire, Chief Executive of XM.com.